A simple way to think about the banking environment in the U.S. is that there's 20 or so very large banks, and they really are quite large, and they hold most of the assets of the banking system. And then there's many thousands of smaller banks. I think that these smaller banks are not, did not cause this crisis and do not need to be re-regulated coming out of the crisis. They already face quite a bit of regulation. That regulatory regime for the smaller banks actually works fairly well. We have a system of deposit insurance for those banks. The banks pay for the premium on the deposit insurance. We also have a system of prudential regulation for the banks. In the prudential regulatory framework, all the banks get rated on how well they're doing from the so-called CAMELS ratings from 1 to 5. That gives the regulator some idea about which banks are in trouble. The system allows failure, so it's capitalism at work. If they make bad loans, then they are going to fail. And when they do fail, we do not go to bankruptcy court. The FDIC comes in, seizes the firm, and sells off the pieces, usually in a very transparent way that does not disturb the customers of the bank. That process works pretty well. We have, of course, it's at times of economic stress. We have lots of bank failures today. But as a process, as a regulatory process, we're able to handle those failures, and we're able to handle them in a way that does not create panic. We do not see people worried because one bank closed that maybe they should take their money out of the next bank that is not in trouble at all. So that system is working pretty well. You'd like to have something like that for the very large institutions, but that's a very difficult thing to do. But that's where you'd like to go with regulatory reform. But I think the main point is that the smaller banks weren't really involved in most of the problems that precipitated this crisis. They're already a pretty heavily regulated industry. I think regulations on the banking industry during the last 20 years have created a shadow banking industry, a group of firms that take some of the business away from the banks, even though they're non-depository institutions. That's why they're not banks, but they're able to move a lot of the types of business into an unregulated environment, and that's a lot of what has happened over the last 2 decades. So you've got a banking sector that really has a regulatory regime in place that works pretty well. And we probably don't want to load them up with more regulation in response to this crisis, because that's not going to do anything to prevent a crisis from occurring again in the future.